In this world, there are two types of people. There are the ones who gamble and play at the casino, and there are the ones who are the casino. And we all know who makes the money in this world. With options trading, the choice is yours. Who do you want to be? Do you want to be the person sitting gambling at the casino? Or do you want to be the person running the operations? Do you want to be the casino itself? And thankfully, in this video, I am going to show you how you can be the casino of the stock market. I am going to show you how you can start selling credit spreads on Webull so that you are making money as a casino in the stock market. Now in this video, there are going to be four main topics. Topic number one is what is a credit spread? Topic number two is how do you make money with a credit spread? Topic number three is going to be what is the risk and reward ratio for a credit spread? We're going to take a look at your profit and loss margins for this trading strategy. And topic number four, we're going to dive into Webull. We're going to research a trade. We're going to analyze that trade. And I'm going to show you how to execute it in Webull. It's really easy once you learn how to do it. And after this video, you might be a pro. Now, before we start diving into this video, there is a link down below for Webull, which will give you free stocks. Webull is a great platform, especially on your mobile device. And also in the video description, there is a link to the Patreon. When you sign up with the Patreon, you are going to get access to weekly reports where I let you all know what stocks I'm trading, and a lot of them are going to be credit spread trades. In addition to that, you will also get access to a Discord server of hundreds of investors where we talk stocks and investing every single day. We talk trading strategy, we talk potential trades. It's a community where we learn together, we grow together, and we make money together. A link is provided down below. All right, topic number one, what are credit spreads? Well, credit spreads, the reason why they're called credit spreads is because when you initiate a credit spread, you are going to receive money as soon as you initiate that trade. You're going to receive what they call a credit, because in this case, you are the casino. There are two types of credit spreads. There is a put credit spread and a call credit spread. With options, when you trade single options, when you buy a call, it's a bullish move. But when you sell a call credit spread, it's a bearish move. When you buy a put, when you buy just a put, it's a bearish move. When you buy a put credit spread, it's a bullish move. So it's the opposite of just buying a call or buying a put. So in reality, when you sell a call credit spread, you believe that the stock will be below a certain price. When you sell a put credit spread, you believe that the stock will be above a certain price. And when you trade spreads, you are going to be buying one option and selling another option against it. There is going to be a spread. For instance, when you do a call credit spread, you are going to be selling a call at a certain price, and then you are going to be buying a call at a higher price. That is your hedge. For a put credit spread, you are going to be selling a put at a certain price, and then you are going to be buying a put below that price as your hedge. When you initiate credit spreads, you are putting a hedge in place so that you are maximizing your potential loss, but you're also maximizing your potential reward. The max profit and loss is well defined when you enter into credit spreads. So with that in mind, you can really strategize. You can initiate multiple trades because your risks are well defined. For the rest of this video, we are only going to be discussing put credit spreads because they are my favorite of the two because your probabilities are higher in my personal opinion. Typically, if you're bullish or if stocks stay flat, there's a more likelihood that you're going to make money. It's easier to be a bull in the stock market than it is to be a bear. Bears are right every now and then. I have my bear mask because sometimes I am bearish on certain stocks. But typically, bulls are going to win the fight. The stock market is bullish more than it is bearish. Now let's move on to topic number 2. How do you make money in a put credit spread? Well, this is one of the best things about selling credit spreads is that you will make money if the stock goes up. You will make money if the stock stays flat, and you will also make money if the stock decreases, but only by a certain amount. The stock can go to infinity and you will make money on this trade. This stock can stay flat, doesn't move a penny, and you will also make money. And depending on what options you pick, the stock can decrease a little bit and you will still make money. For instance, let's say a stock is now trading at a share price of $100 and options expire at the end of the week and you enter into a put credit spread. Your spread, let's say you do a $5 spread and you say, I'm going to sell the $90 put against this stock that expires at the end of the week, and I am going to buy the $85 put that expires for this stock at the end of the week. So you are selling one put option against that stock, and you are buying another put option against that stock at a lower strike price. That second option that you are buying is your hedge. That is in place so that you cap your potential loss, but you're also capping your potential gain by using that hedge. And that hedge is well worth it because whenever things go wrong in the stock market, you want to be protected. When you enter into trades, you want to have a well-defined risk to reward ratio set up so that you know how much you can potentially make and how much you can potentially lose. So that way, if something does go wrong, you are not completely screwed. What is the maximum loss to you? Well, this is really easy to calculate as well. It is just your spread. So the difference between those two strikes. In this case, it was a $5 spread. So the max loss is $500. But you also got paid 50 cents. So that's $50 up front. So you can subtract that initial money that you received and the max loss to you is $450. So the max loss is really easy to calculate. It's just your spread minus the credit that you received. Now, sorry about that. I kind of merged topic number 2 into topic number 3. Now, topic number 4 is we're going to research a trade in Webull. And I'm going to have to jump over to the computer to do so. So bear with me. We'll get that situated right away.
A few moments later.
Okay, let's get nerdy, mi gente. Let's talk about a put credit spread. Now, the example I'm showing you right here, right now, is a stock trade that I posted in last week's weekly report. This is a put credit spread on DraftKings. It's a bullish trade, as we talked about earlier in this video. It was a trade that is a short-term trade because the expiration date was the end of that week, and the options we decided were the $48 put and the $47 put. As you can see by this photo here, we're selling one put option at $48 and we're buying one put option at $47. Our spread is $1, the difference, and the max we can lose is $100 on this trade, and the max potential reward is the credit we received, which is $17. Now, when analyzing this trade, the reason why we picked these strike prices is because the prior low for the stock was $47.54. So I believe that that would act as a support. Now, something you should also keep in mind is you don't realize your max loss until you're below the lower strike. So even if this stock was below $47.73, that does not mean that you're losing all the money. Your max loss occurs at when you hit that lower strike price. You lose money if the stock is below this price, but you gradually decline until you hit that final strike. All right, right now we're looking at the 30-minute chart for DraftKings. And if we look at this, here's our prior low that we mentioned on that report. And here's where the stock ended up on Friday. Now, something you need to know when you enter into these spreads is you can sell them whenever. So if the stock continues to go up, you can sell and make some money. But you won't realize all those gains until the week ends, or it's trading at a penny, and therefore you could try to sell it for a penny because you received $17. If you sell it for a penny, then the gain to you is $16.99. But what happened to this stock is super interesting, and this shows the power of credit spreads. As we can see here, this is Friday, and on Friday, we had a sell off. And I held on to this position because I typically hold on to them to expiration, which it's up to you what you want to do. But we still made money even though the stock went from $51.07 on Thursday all the way down to under $48. The stock closed on Friday at $47.89, which is above our break even. So even though we had a put credit spread and the stock was bearish, this trade still made us money. It was still profitable. That shows the power of being the casino in the stock market and not being the gambler. All right, that trade was for last week. Let's analyze that same trade for this week. I kind of like the idea of being below this support at $47.54. I kind of like being at $47 and selling a put credit spread with a spread of $1. So selling the $47 put and buying the $46 put. But it's really easy to execute in Webull. If you go to the options chain, more likely than not, this is what you're going to see. You're going to see a single option, and you either have it set up for both calls or puts. We're interested in the puts because in this case, we're selling a put credit spread. Now, it's super easy to sell spreads in Webull. You just need to select vertical instead of single option. Now that we have this, we need to select the right spread. And like I said, we're looking at the $47 and the $46. And right now, the last was 17 cents. The mid is 12 cents. I like the idea of selling this for 15 cents. So we're going to right click and we are going to sell. We're selling a put credit spread. Now in that, we're going to sell this vertical. We're going to buy the $46 put and we're going to sell the $47 put. The quantity, this is up to you. You get to decide how many of them you want to buy. And the price, like we said, is 15 cents. Now, if we take a look at the graph, I highly recommend to always look at the graph because it might get confusing between buying and selling things. But if you look at this graph, you will know when you make money and when you lose money. So in this graph, we can see that we're making money if the stock stays above a certain price. This is because we're selling a put and we're buying a put against it. The max profit is $15. That's how much we're getting up front. Our break even is $46.85. It is the higher strike, $47 minus the credit we received. Our max loss occurs at $46 and it is 100 minus 15. So the max loss is $85. And you can see this here. If this stock was to go to $43, we lose $85. It does not matter. Once it's below $46, that's our loss. And this stock can go to 100. We would only make $15. The risk to reward is well defined. You are the casino. You are going to be making money if the stock stays flat, if it moves up, and also if it drops. As long as that support holds, you are going to be profitable in this trade. This is a trade with high probability. There needs to be a really bearish move in 3 days for you to lose money on this trade. Now on your phone, it's the same process. You are just going to go to vertical. You are going to find what spread you want
and then go from there. Now, keep in mind that this width is 1 for all of them. You can be more risky in this spread. You can change the width to, say, 5, and you're going to get paid more money. For instance, if we do this $48 versus $43, you're going to get paid $50. But the max loss to you is going to be that spread. So it's going to be $500. The bigger the spread, the more you are going to potentially lose, but also the more money you're going to be collecting up front.
All right, mi gente, that wraps it up for this video. I thank you so much for your time. Do not forget that we have links down below for Webull that will get you free stocks. And also, don't miss out, join the community, get access to those weekly reports, and also get access to that Discord server. Now, if you like this video and the content that I am providing, please consider hitting that subscribe button, ringing that bell, and smashing that like button. Otherwise, I will catch you all at a later date. It's been real, it's been fun, it's been real fun. And this is We Are Investing, and together we are invincible. See ya!